Hey, we're going to get rolling here this week. And it's just about weather, and have to admit, don't have to tell you guys this. Rain and cool weather in here, and things are behind. So how far behind are they? Here's a chart in front of us. This is planting progress going back about the last 25 years, and that dark black line in front of us is this year. And you can see by this is the third slowest planting pace we've really had in the last 25 years. Behind both 2013 and 2019. And 2013, we did get a surge of planting into mid-May. 2019, it really drug on, okay, and took well into June before we got past the 90% planted mark. Just for a quick point in here right now, 2013 final yields were above trend. 2019, they're below trend. So we're not saying in here that hey, this crop is going to be poor because it's late planted, but this window on getting it in the ground in a timely manner is going to be quickly closing in here with the next couple of weeks. It's all about weather. Let's not kid ourselves. Here's one of these weather maps we look at every day. This comes from the National Weather Service. This is a 7-day forecast. It's called QPF, or Quantitative Precipitation Forecast Map. And as you can see through the central corn belt, it's forecast to be relatively wet, between 1 to 3 inches of rain. When these planting delays are going to be sticking around in here right now, this is something that needs to be monitored. Hopefully temperatures warm up, but this is why the market, has not fallen apart, or that there's really a lot of confidence out there that the crop will get planted on time. We need to really monitor these maps. So let's just go through some charts in here and see what they look like. Here's November soybean futures. What sticks out to us on November soybeans is the 50-day moving average, which is the purple line. Okay, we went down there here about a week ago. Now this week we're testing that again. If that level is taken out, that red line is down at $14. That's where the market broke to following that March planting intentions report. Beans right now, you'd have to say, is at a critical support level. As we get towards the December corn chart, what sticks out to us is last week we hyped up, hey, there's some planting delays out there, and the market went up and we made new contract highs by only a penny and then backed off. Now starting this week, even though it is a little bit on the wet side, the market's not able to add any weather premium. This chart tells us in here right now not to be really bearish on corn, but the concern comes from the fact that we weren't able to make new highs on these potential planting issues that are out there. As we get towards the wheat market right now, as you can see, this 50-day moving average is also the purple line that needs to be monitored here on July Chicago wheat. And as you get to KC wheat, we're still holding that same support level, but prices haven't broke off nearly as far. If we're taking weather premium out of a market right now, we think the one to watch in here is KC wheat. We're not saying there's a great crop because of this rain, but it's probably not getting a lot worse. This moisture is going to help stabilize it. As we get towards Minneapolis wheat, actually this is the market that's probably been in the strongest uptrend. Last week, unlike corn, it did make new highs. It is pulling back somewhat this week, okay? But if there's a market where people want to hype up, we got major issues out there. We're going to have some planting delay concerns. Right now, looking at the charts, we got to get to Minneapolis wheat and say that's what the market's focus would be. As we look to finish up in here, or I got this chart in here as well too. I just wanted to bring up a hog chart. I mean, we've been in steep uptrends in the grain, and the perception is, hey, we can't go lower. That's been the attitude in hogs a little bit too, and we really didn't think this June hog contract would go much below $1.10 to $1.12. All of a sudden, we violated that support. We quickly took $10 out. This is a market that has bullish fundamentals with reduced supply, but we wanted to show you this chart as the momentum shifts on the market. We tend to go further than we would expect, both to the higher side and to the lower side. This chart bothers us a little bit, even though the fundamentals should support us in here. As we look to wrap this things up, I mean, it's all about weather. That's the bottom line right now. Let's not kid ourselves. When it gets towards planting in here, we really have a critical 2-week window in front of us. 2 weeks from now, if planters are rolling and we're pushing corn planting past the 80% level, you're probably going to see some premium taken out of the market. If not, everyone's going to quickly revert back towards what happened in 2019. Bothering us a little bit this week on the corn market is the fact we're not making new highs, even though we are behind on planting. We highlighted the hog market in here. I think you got to look at just selling some cash ahead. You can still push up to insurance levels and consider short-dated options. The other thing we want to bring up here quick is we showed on how these markets could be vulnerable. We just don't want to be all doom and gloom in here, but that's where you have risk. And I think it's important to keep in mind we do have, and using corn as an example, we do have $7 plus corn. And our long-held theory with the markets is that the world will never produce enough $3 corn, is that there's not the economic incentive to raise it. But over time, the world is going to produce too much $6 or $7 corn. It just seems to us we got to keep that in mind in here right now, and that a lot of weather premium is already built into this market. As we move ahead, any questions, feel free to give us a call, drop us an email. If things start changing in here towards the later of the week, we'll get another video out for you. Have a great day.